Hey guys, this is Justin from breakintocre.com, and in today's video what we're going to do is break down commercial real estate leases, specifically what you need to look out for the next commercial real estate lease that you analyze. So if you're underwriting retail properties, office properties, industrial properties, and you want to know how to work through a long lease document without wasting time and the real things that you need to look out for, make sure to stick around for this video. Now on this channel, we talk about real estate investing careers and real estate financial modeling. So if you're looking to break into the industry for the first time or advance your existing career, make sure to hit that subscribe button and hit that notification bell as well. Now, if you've ever read a commercial real estate lease, you probably know that these documents can be extremely long and also extremely difficult to sift through. But after reading a lot of commercial leases throughout my career and trying to save time in the process, I put together a list of the top 7 things you need to look out for when you're analyzing your next commercial real estate lease. Now, these 7 things are going to be really helpful when you're analyzing a new acquisition opportunity. So when you're going into a property where you haven't had any control over how these leases are actually signed, you're definitely going to want to know these 7 details that are going to have a big effect on your overall underwriting and valuation of the deal. So let's get into it with number 1, and that's the square footage of the premises. Now, the square footage of the premises is the square footage of that tenant suite. Now, sometimes this may also include the square footage of the entire property. And with that, the lease also may include the tenant's total pro rata share of the overall square footage at that property. And in those cases, it's really helpful to reference in case there's any sort of discrepancy between the landlord and tenant as far as what kind of operating expenses are owed from that tenant to that landlord if there are operating expense reimbursements at the property. Now, number 2 is the exact start date and end date of the lease. Now, this seems really straightforward and should be a very straightforward thing in the lease, but oftentimes what you'll see is that the lease commencement date when that lease actually starts, or that rent commencement date when that rent actually starts, is dependent on some event that occurs after that lease is signed. So oftentimes you'll see this as some sort of a construction period where the lease is signed and then 6 or 9 months later, the construction is expected to be complete. And within that lease document, you'll see that the lease commencement date or the rent commencement date starts on the first of the month after that construction completion. So with that, there should be some sort of addendum to that lease or some sort of additional information that will give you the exact start date and the exact end date of that lease. Now, number 3 will be the tenant's options to renew and the rental rates for those options to renew. So an option to renew is just a tenant-specific option to renew the lease at a predetermined rental rate. Now, usually you'll see this as either fair market value, so whatever that fair market value of that rental space is at the time that option to renew is exercised. It could be a predetermined rate, and there also could be a minimum floor where you need to have something like a 3% increase. But knowing this information is extremely helpful, especially when you have a tenant that's paying below market rents and you want to be able to capitalize on that when they vacate. Understand if that tenant has options to renew, and if so, what are those terms of those options. Now, number 4 is one of the biggest, and that is the base rent and escalation schedule. So in a commercial lease, you're going to have set base rent amounts for each and every year of that contractual lease agreement. Now, this could show up in a few different ways. So you might have an exact rental amount in dollars shown on that lease. You may have an exact percentage increase shown on that lease, or you may have some sort of an index like the Consumer Price Index in the US that's going to govern the kinds of increases that your tenant is going to pay every year. So obviously, this goes without saying, this is one of the most important things when it comes to the economics of your deal. So make sure you understand exactly what that base rent is going to be. Now, number 5 is close behind the base rent, and that is the reimbursement structure for that tenant. So specifically, is that tenant responsible for reimbursing that landlord for any sort of operating expenses associated with that property? And if so, what is the agreement around that? So this could be a triple net lease where the tenant is going to reimburse the landlord for its pro rata share of all operating expenses at the property. This could be a full service gross lease where the landlord is going to cover all expenses at the property, or this could be some mixture of the two, which is oftentimes what you'll see. So make sure you're looking out for things like expense caps. So in some leases, you may find that the tenant has only agreed to pay a certain expense line item up to a certain dollar amount. And make sure that you're also aware of any sort of excluded fees. So in some scenarios, you might find that the tenant is not willing to reimburse property management fees, but they will pay you an admin fee of something like 10 to 15% of your overall expense load at that property. So make sure you're very clear on what expenses are reimbursable before you buy the deal, because again, this is going to have a huge effect on your overall economics and your cash flows at that property. Now, number 6 is a TI or tenant improvement allowance or free rent promised at some point in the future. Now, usually when you're buying an existing property with current in-place leases, oftentimes you won't have to worry about this. But sometimes what might happen is that the tenant and the landlord may agree to some sort of free rent clause in the future or some sort of TI allowance in the future. And with that, you're going to need to plan in your capital costs or your base rent assumptions based on that promised tenant improvement allowance or on that free rent. And oftentimes, if you're acquiring a property and the expense is going to come up in the next 1 or 2 years, you can get that seller to credit you for any sort of outstanding TI allowance or free rent amount. So that's also a really important thing to be aware of when you're going into a deal. Now, finally, number 7 is specifically for retail properties, but this is a percentage rent clause. So a percentage rent clause is going to allow the landlord to participate in some of the tenant's net sales if they exceed a certain level. And with that, you may be able to collect sales data from that tenant and make an assumption around what that percentage rent might be in the future. And if you can take a look at historical cash flow statements and you can see that the seller has received percentage rent payments for the last 2 or 3 years and sales have been steadily increasing over time, that may be something that you want to include in your underwriting. So in my experience, those are 7 of the most important things that you need to look out for in a commercial real estate lease that are going to affect your cash flows on the deal. Now, if you want to learn more about commercial real estate leases and how these terms are going to affect your cash flow statement and ultimately how to build a financial model around all of this, make sure to check out my course, Commercial Real Estate Investing 101, where we go over commercial real estate leases, commercial real estate cash flow modeling, and even more advanced topics like partnership and waterfall modeling as well. And as always, if you want access to all of my courses, all of my models, and additional support from me, make sure to check out Break Into CRE Academy, and I'll link both of those in the description below. So if you like this video and want to see more content like this, make sure to let me know by hitting that like button, subscribing to the channel, and sharing this with anyone else who might find this helpful. Thanks so much for watching, and I'll see you in the next video.